All right, our highlight, last day of the week, last day of the month, and we open up 14 points weaker, but that doesn't mean you have to be bearish. I'm going to show a couple transitional moments that either kept you from fighting it as much or holding on to longs on a day that could just start repricing. You'd never know that from the beginning, but you try to get a sense on getting on the right side as soon as possible. Because generally most people miss the short and try to buy it looking for the bounce on a big down day like we had the S&Ps today. Also, I'll say this at the end, subscribe to the channel, YouTube channel, so you get notified of these videos daily. All right, so you're looking at the right side of the screen. On the open, 8:30 Central. We open up about 14 points lower than where we closed yesterday. In context, we were strong. We rallied a ton and closed at the high yesterday, so everything was looking good. And then we open up our eyes this morning and we're 10, 14 lower. And it's like, well, are we going to just find a little bit of a bounce? I was a little bullish until this happens. So look at the right side. We jump and then we come back. Let me go over that again. We jump, and then we come back. The long up down bar, which transitional moment to the downside. It doesn't mean that you could sell these 74s and buy 35s, which is where we're trading 2 hours later. Don't work like that. But you start getting yourself on the right side sooner rather than later, and the market falls out of bed. Now, the volume was good. The overnight range was good. You knew you were going to have more volatility. And now this has got to get, if you're not short for this, you're bearish for this with this analysis. But if you're not short for this, there's nothing wrong with that. Watch this. Jumps up, comes down. Jumps up, comes down. Jumps up, comes down. That's a head fake. This whole sit to go down. They keep trying to jump it. Even if you're trying to play it to the upside. When they scoot back through the middle, that's bearish. Now you get this jump. All right. You could be bullish. You could think there's a bottom. Not after you see that. You could see every chance there was to make it seem like there was a bottom. It was quickly taken back. All right. Gets to the point where there's almost something that this market knows about that we don't know about that it's worried about. We also at about 8:40 Central, and this is a big reason for this move lower, and you got to be privy to it, is a regional number. Chicago Purchasing Manager came out not just weaker than expected, but a lot weaker than expected. The market's already weak, and now it gets a pretty decent economic number, and it's a pretty decent miss, and it's to the downside, making this market stay under pressure. I don't have a problem with people trying to buy it. I have a problem with people that try to keep it after they buy it, that add on a day like today, they got a monster hole in their account, and they can't just once try to play it from the short side and realize at some point with all these moments that are bearish, that's the side you got to play it at. You had a head fake in here. You had the long up down bar over here after the open. Well, that was actually here after the open. Right here. You had the head fake in here. There was another head fake opportunity, if you guys remember. I think it was right in here where it jumps up, slides through the middle, bam, consolidation box, and it goes. None of this is hindsight's 2020. In the trading room, it's all we're talking about in real time and trying to keep and make everybody as objective as possible. So as I just keep scrolling through, I give people, here was another capitulation. This could be a rejection bottom. And I said to people, yeah, it feels different, but don't have your ass surprised if we go back and retest it right there. And I said, they're going to hold these orange levels, and they do, and they rally. That's great. And it looks different. I said, well, then play a pullback, but don't be surprised they go and retest it. And sure enough, they step all over it and they go and retest it. So could they chop? And here's where we're at now, 6 points away from it. Could you find a bottom? You might get bloodied up trying to find the bottom, and when you finally do, you just get back what you lost. Or you get bloodied up that when it finally bottoms, you're not around to catch it. You catch the losers all the way to the one that was the winner, and that one you missed. Or again, you have to catch the bottom just to get even. So don't look for bottoms just because you're missing the good shorts. And I got news for you. There will come a time in a day where you finally catch the short on a down day, and that's when the bottom happened. Welcome to trading. It's important to anticipate earlier, but also know if you've missed some opportunities. Have you missed some downside opportunities today? I'd say so. We open up at 75. We're trading 40. Now, it wasn't super easy to say, just sell and hold, guys. That's all you have to do. Of course not. Anybody who tells you that's a liar. But there are transitional moments in real time to get yourself on the right side, keep yourself off the wrong side, which is more important, and keep you from your bad habits. And everybody has bad habits, but they surface on days like today. They don't surface in 5-point range days. Your bad habit of adding to a loser doesn't happen on slow days in slow markets. They happen on 50-point down days, 500-point down days in the Dow. That's when they happen. People who are alcoholics, they don't slip drinking when they're sleeping in the middle of the night. That's not when it happens. It happens when they're at parties or they're at a bar or something bad happens to them. I've known people that have had that disease. So I talk about it because it's a disease to add to your loser. And I'm not comparing people with drug problems and alcohol problems and things like that to trading, but I am comparing that bad habits and things that are awful and will keep you from ever being successful, which is adding to a loser, will come not on small, slow, tight days, but on days like today where it's just a trend and it just keeps running and you could look up and you're 10 points lower, 15 points lower. And then maybe at some point today, there's the realization of why we're so weak. I don't know if it's the coronavirus. I would have thought that that's kind of priced in. I didn't hear anything worse today or last night. The World Health Organization at 1:30 yesterday in the afternoon said something. We went down and rallied a bunch. So I figured that was behind us. This impeachment seems like they're going to end it today. So we figure that's more bullish than bearish. So there might be something that we don't know yet about. And we could find, we could say, that was what it was. And the smart money, the reason why they call them the smart money. I don't know if that's the case. Or maybe they're just worried about this coronavirus percolating in the economic struggles or contractions it's going to cause in China, because they essentially had to shut down and are shutting down that country, second biggest economy in the world. And what kind of adverse effects will it have on the U.S.? Then you get some manufacturing data in Chicago. The Chicago number that was not only weak, was real weak. And now we got the ISM number coming out on Monday. The unemployment report a week from today. Maybe they're positioning themselves again into a weekend like last Friday, where they don't want to take a lot of risk over the weekend. And take a look at it. Back to the lows. So every moment where it looks different and the bottom is in isn't like other days. That's the other thing that I try to tell people is what you use on a daily basis doesn't always work on days like today. Same tool, same technique, same concept, same situation, same price, same setup, but it didn't work. Why? Because the market is weak. Don't fight it. This YouTube video is these videos rather you can subscribe to the channel so you get notified to it. I put them out 5 days a week. But as you guys know that are in the trading room listening to it as I'm doing this recording live, that the analysis is live. So jump in and join. And those that are leaving today, those that watch this video, those in the room obviously now, those that watch the video before today is out, today's the last day of January, everything looks different for bottoms being in. Be willing to miss. You have to be willing to walk away from a trade in order to catch a good one. Don't get anxious. Don't get emotional. And don't add to your losers. Have a great weekend. Enjoy the Super Bowl. Doesn't matter who wins. It only matters if you can make money. And yes, I'm advocating gambling if it's legal. Sometimes it is, even if it's not.